Welcome back to Stock School Daily.
Canada was moving in complete lockstep with the United States. We were talking about a 100% surtax, a total exclusion policy.
So if you were a Chinese EV maker, the Canadian border was basically welded shut.
Welded shut. You couldn't import the cars because you couldn't possibly price them competitively with a 100% tariff.
It was a de facto ban.
Exactly. But the new reality, as of yesterday, is a complete 180. The barricade is gone, and it's been replaced with a turnstile. The New Deal allows for a quota of 49,000 units to come into the country at just a 6.1% tariff.
Okay, I have to stop you there because that math is insane. We went from a 100% surtax to 6.1%.
Yes.
That's basically normal trade terms.
It's a normalization of relations. That's what it is.
And I have to play the skeptic because I know our listeners thinking this 49,000 cars. In a global market of millions, that sounds like a rounding error. Is this really a tectonic shift?
If you're looking at it purely as a volume play for, next quarter, then no, it's not huge. But if you look at it through a geopolitical lens, it is earth-shattering. You have to remember what Canada is.
It's a G7 nation.
It's a G7 nation. It's a member of the Five Eyes Intelligence Alliance.
The U.S., U.K., Canada, Australia, New Zealand. The absolute inner circle of Western allies.
The tightest inner circle. And Canada is the United States' direct neighbor and its largest trading partner. For them to break ranks with the American total ban strategy is a massive, massive deal. It's a diplomatic earthquake. They're basically saying, we are decoupling our EV policy from Washington. We're going our own way.
Which implies a level of independence on this issue we just haven't seen.
It does. And, more importantly, by setting up a quota and that low tariff, they have legitimized the product.
Legitimacy. That is the key word there.
It is. Before this, Chinese EVs were being framed as a national security threat. Spy cars, data risks.
Things you ban.
Things you ban. Exactly. By setting a quota, Canada's now saying these aren't threats, they are commodities. They're treating them as a product to be managed, not a virus to be contained. And that shift from threat to tradable good, that is the signal the market is missing.
That is a profound distinction. It changes the whole narrative. But I want to go back to the number, 49,000. The report has this really interesting counter-argument to the whole "it's too small" idea. They call it the premium filter.
Yes. This is where the economics get really, really interesting.
So walk us through this. Usually in business, you want uncapped volume, right? Sell as much as you can. Why is a hard limit, a quota, actually a good thing for a company like NIO?
Well, think about it from the perspective of the importer in Toronto. You have a golden ticket. You have a license to bring in 49,000 cars this year. That is your hard cap.
So the slots themselves are scarce, they have value.
Exactly. So are you going to waste one of those precious slots on let's say, a $12,000 car with a $500 profit margin?
No way, you'd go broke. You want to maximize the profit you make on every single slot.
Precisely. The quota is the enemy of the cheap, high-volume car. You take something like the BYD Seagull. It's a great little car, hugely popular elsewhere, but it's low cost, low margin. Its whole business model relies on flooding the market.
Which you can't do if the volume is capped.
The math just falls apart for the Seagull in Canada. But for NIO...
NIO is premium.
It's premium. It's luxury tech, high price, high margin. They don't need to sell 1 million of them to make the numbers work. So this quota system, it naturally filters the market. It clears out all that cheap competition.
It's like a velvet rope at a nightclub.
That is a perfect analogy. It keeps the riffraff out, commercially speaking, and leaves the lane wide open for the premium players. It effectively curates the Canadian market in NIO's favor.
So the regulation that on the surface looks like a restriction is actually a protective moat for high-end EVs. That is fascinating. But there's another layer here, right? It's not just politics or economics. It's the weather.
The sandbox theory.
Yes, the report calls Canada the ultimate testing ground. Because it's wealthy, it's tech-forward, and let's be honest, it is freezing cold.
Cold is the word. We have to address the FUD, the fear, uncertainty, and doubt. It is the elephant in the room for every single EV conversation in the West.
Oh, I know this one. It's the first thing your skeptical uncle says at Thanksgiving dinner. Oh, EVs don't work in the cold. The battery will just die in a snowstorm.
You'll be stranded in -20. And look, historically, with older battery tech, there was some truth to that. But that narrative sticks. It holds back adoption. And this is why the Canada deal is so strategic for NIO. Canada is the ultimate stress test.
It's the final boss level for an electric car.
Right. If NIO can succeed in the Canadian market, If they can run their cars and their battery swap stations effectively in a Montreal February or Winnipeg January, that whole argument just evaporates.
Because it's not data from a lab anymore, it's real-world proof.
And it's North American proof. A test in Norway is good, Norway is cold, but for the North American psyche, for the consumer in the US and Canada, Norway feels a world away. Canada's right next door. It's the same roads, same culture, same brutal winters.
So if you can make it there, you can make it anywhere.
It kills the FUD.
Yeah.
Forever. It provides empirical data that Western consumers will actually trust. It validates the technology in a way no marketing campaign ever could.
So Canada is this perfect storm of regulatory breakthrough, market filtering, and tech validation. But the source goes one step further. They use the term Trojan horse.
Yeah.
That implies some kind of sneak attack. What do they mean by that?
This is where we have to stop thinking like car salesmen and start thinking like infrastructure builders. The report argues that selling the 49,000 cars is just the entry mechanism. It's the excuse to get in the door. The real goal is planting the flag, because NIO isn't just selling a car, they're selling a system.
The power swap stations.
Correct. And this is so crucial. A power swap station isn't just a plug on a wall. It's a piece of real estate. It's a structure. It requires land leases, grid connections, permits.
It's heavy infrastructure. It's permanent.
And once those 49,000 cars are legal and on the road in Vancouver and Toronto, the infrastructure has to be built to support them. You have the justification. And once you build a power swap station, you have a permanent asset in the ground.
And unlike a charging plug, which can be compatible with a Ford or a Tesla or whatever, the swap station is exclusive.
It's a moat. It locks in the user base.
Yeah.
If you buy NIO and you get used to swapping your battery in 3 minutes, you are locked into that ecosystem. And by the time the quota is maybe lifted or expanded in, say, 3 years, NIO will already have a physical network across the country.
That's the Trojan horse. The cars bring the network, and the network secures the territory.
It is classic land and expand. Yeah. And it's brilliant because once that concrete is poured, it's very, very hard to undo.
Okay, so that covers the northern front, the Carney pivot. Opens the door, validates the tech, lets them dig the moat.
If you found this helpful, hit that like button and subscribe for more.